60% of Canadians end up breaking their mortgage early, leading to mortgage penalties, which is one of the quickest ways to erase built-up equity in your home or any interest savings you may have had. Before we get into this video, I ask if you can like, subscribe, share this video with a family member or friend, as it helps my channel grow and reach more Canadians who are looking to learn about the mortgage and real estate industry. So why are there mortgage penalties in the first place? So anytime you break your mortgage term early, lenders are missing out on interest that they would have made off your mortgage if you would have stayed with their financial institution throughout the whole length of the term. Due to this loss, lenders try and discourage borrowers from breaking their mortgage term early with a mortgage penalty. So what penalty will you be charged if you break your mortgage? This really depends on your mortgage type and the terms of your mortgage, but depending on what type of mortgage you have, this penalty will vary. One big misconception that people have is that you'll only get charged a 3-month interest penalty if you break your mortgage. This may be true for variable rate mortgages, but when it comes to fixed rate mortgages, it's either 3 months interest penalty or interest rate differential penalty, whichever is greater. The 3-month interest penalty is relatively easy to calculate. Just take what you're paying in interest monthly and calculate that by 3, and that will be your penalty to break your mortgage. But the interest rate differential penalty takes in a couple different considerations when calculating the penalty. Things that are considered in this calculation are how much time is remaining in your mortgage term, what's your mortgage balance, what's the discount you got versus the posted rates at the time, where are current market rates at. Every financial institution kind of calculates their interest rate differential penalty different. So that's why it's important to reach out to that financial institution to get your set in stone interest rate differential penalty. Here's an example of what the interest rate differential penalty is trying to calculate. So for example, let's say you have a rate of 5% right now and current market rates are 3%. If you're breaking that mortgage early to take advantage of current market rates of 3%, the banks are also going to have to most likely lend that money out at 3% as well, because those are current market rates. So the bank's no longer going to be able to lend that money out at the 5% which you were paying. So interest rate differential penalty is kind of based off of that. There are many different things that lenders can implement in their interest rate differential penalty calculations that can differ what that penalty is going to be. So like I said, that's why it's important to reach out to that lender to get the exact number. Is it possible to avoid a mortgage penalty totally when breaking your mortgage? Well, yes, you can go into an open mortgage. An open mortgage is one where there's no strings attached. You can break your mortgage at any moment without paying any penalty. The downside to this is that these interest rates are going to be higher on an open mortgage because it's riskier for a lender. You can leave at any point without being charged a penalty. Generally, open mortgages are only intended for shorter periods of time, since that interest rate is higher, where you know you're going to be potentially breaking that mortgage early. So the open mortgage would be to bypass that penalty. My best advice when trying to keep your penalty minimal is speak with a mortgage agent who gets to understand your situation and goals. This way they can match up the mortgage product that you're going into with your lifestyle and goals. So if one concern for having a mortgage is those mortgage penalties, a mortgage broker can put you in a product that has a minimal penalty, or in 2 or 3 down the lines you're potentially going to sell or need to refinance the property. If a mortgage agent understands that, they can put you in a shorter term rather than a full 5-year term to also try and minimize that penalty. A mortgage is going to be one of the biggest liabilities you have in your lifetime, so making sure the full product fits your needs rather than just getting a low rate is super important. Hopefully this gave you a better understanding of how penalties work. If it did, please like the video, share it with a friend, and subscribe to my channel. Remember, I also have those 3 free guides. The first one is a first-time homebuyer's guide. The second is a refinancing guide. And the third is getting financing for an accepted offer. So if you're a homeowner or want to become a homeowner, these guides are for you. If you have any questions, make sure to ask them in the comments. I'll be sure to answer all of them. Or if you want to reach out to me directly, I have my calendar link in the description below. Go click that and fill out a time slot, and I'll be happy to answer any questions you have.